to Grand Capital. I'm Dmitry Karlov, Senior Trader with Market Overview. Okay, let's take a closer look at what is happening around the major currencies. Well, shortly, first of all, the euro remained weak after poor data from Germany, and the GBP remained close to its bottom with little data or support. So the pound has continued to weaken against the dollar and the euro as currency speculators bet against the UK currency. Following confirmation this morning that the UK economy contracted by 0.3% in the final quarter of 2012, the pound fell against the dollar to trade at 1.512. So, and closer to euro and USD. This pair was holding close to flat until German data disappointed with unemployment rising and CPI missing the market. The euro lost momentum and tumbled against the dollar to trade at 1.3122 and continues to weaken. The markets have taken the Italian elections results in stride. However, we view them as a significant euro negative, particularly as it speaks to the willingness to accept extreme uncertainty over reform. So, Eurozone CPI was, as expected, on headline down in 1% month-on-month and plus 2% year-to-year. On headline and a softer than expected core print of 1.3% year-to-year. German unemployment was mixed with job against of 3,000, but at an increase in the unemployment rate to 6.9%. Regional CPI appears higher on the month-over-month releases, while France released weak consumer spending, falling in 0.8% month-on-month and 0.2% year-to-year. Spain released disappointing final quarter GDP. Well, it was down on 0.8% quarter and 1.9% year-to-year. So the complication for euro is at the Bank of Japan, Bank of England, and Fed. So they all have large quarter programs in place. Euro becomes more attractive from a ECB balance sheet perspective. And now to GBP, United States dollar. This pair gained a few and is carving out of a bottom formation, having climbed 0.1% since yesterday's close. However, a push higher in GDP is unlikely to gain any momentum unless there is a break above 1.5234, as I mentioned last Wednesday close. Today's strength was widely blamed on M&A flows, but overall confidence remains weak. There was limited news flow for GDP today. The recent fall in the value of sterling represents an opportunity for UK exporters, but capitalizing on the present opening requires a sensible currency strategy. And back to Japan. Japanese yen and United States dollar. This pair is trading in a positive tone, but remaining fairly flat this morning, trading at 92. Seem to support Prime Minister Abe's nomination of ADB Kudora to head the Bank of Japan. Also putting this step behind, so the bank and finance ministry can move forward. Well, the United States dollar edged higher after Ben Bernanke confirmed the Federal Reserve's stimulus program would continue, while the yen traded flat as Prime Minister Abe nomination of a new Bank of Japan chief was supported by economics and analysts. So markets got what they expected. The confirmation that Asian Development Bank chief Haruhiko Kuroda, an advocate of lower yen, was named. So Bank of Japan board member Takagi Koichi said on Thursday that downside risk to sustained economic recovery with price stability are somewhat high. He also said in a speech to business executive in Yokohama City, south of Tokyo, that despite the Bank of Japan new 2% inflation target, the bank must focus on pushing up flat price to a 1% annual rise for the time being. And back to gold. As I told yesterday, gold will be in our overview too. So it was unable to summon the strength of challenge the 1600 level of resistance. It is set for the biggest monthly drop since May and the longest streak of declines since 1997. As improving economies curb demand for bullion as a heaven has said. Investors set ETP holdings by more than 100 tons this month on concern and 12-year bull run is coming to an end by Bloomberg data. Declines by the euro against the dollar also hurt gold. Bullion and the greenback, which gained for a third session in 4 against the single European currency, tend to move inversely. So Bernanke said the United States jobless rate is unlikely to reach more normal levels for several years, but there were few surprises in this second day of testimony in his testimony to the Congress. It is unlikely that Congress will act to stop the 85 billion in across the board cuts due to start Friday. The cuts mandated by 2011 deficit reduction law dent gold's inflation hedge appeal. 3 rounds of quantitative easing have helped gold to a record-breaking rally in the past few years, but sign of United States economic recovery has weighted heavily on the metal this year, so this year it's under pressure. Well, but gold is still gold, as everybody knows. And for today that's all. More details you still can find on our site www.grandcapital.net, and have a nice and profitable day.